Have you noticed that no matter how much your income goes up, it somehow never feels like enough? Your paycheck gets bigger, but your stress about money doesn't go away. And have you also noticed who's always there with a solution? Your bank. Take out a loan, open another credit card. You deserve a nicer car. You should upgrade your home. But strangely, nobody at the bank ever sits you down to explain how to become truly financially independent. I've spent years working in finance, and here's the uncomfortable truth. The financial system in the US makes its money from your debt, your fees, and your constant swiping. The longer you stay dependent, the more profitable you are. It doesn't matter if you're making $30,000 a year or $300,000. People at every income level are anxious about money, afraid of not having enough, afraid of losing what they have, afraid of starting over. So in this video, we're going to flip that script. I'll break down what real financial independence looks like. Beyond luxury cars and big houses, I'll walk you through the 4 levels of financial independence that banks never talk about, and how you can start using your money to buy freedom and peace of mind instead of more worry. By the end, you'll see exactly why the system needs you confused about money and how to finally step out of that trap. Financial independence is not a number in your bank account. It starts in your mind long before it ever shows up on a statement. Think about it this way. I've met people in their 70s and 80s with several $1 million invested, and they still lie awake at night, terrified of running out of money. They check the market 10 times a day, they obsess over every headline, and emotionally they feel broke. On the other hand, I've talked to people in their early 20s, sitting on $20,000 of student loans or credit card debt, completely convinced their life is already ruined. One job loss, one medical bill, and they feel like it's game over. Same country, same currency, totally different numbers. But the emotion is identical: fear. Now ask yourself, where does that fear come from? A big part of it is the story we've been sold. Banks, advertisers, and society keep pushing the same script. You need a bigger house. You deserve a nicer car. Upgrade your lifestyle. You've earned it. The message is simple. Whatever you have right now is not enough. So you chase more without ever stopping to ask one crucial question. How much is enough for a life I actually love? Almost nobody asks you that. Not your bank, not the credit card company, not the car dealer. Because the moment you define enough, you become harder to manipulate. You stop swiping just to prove something. You stop borrowing just to look successful. Real financial independence isn't about having an endless pile of money. It's about not letting money make your decisions for you. Not letting debt own your future. Being able to say no to a job, a purchase, or lifestyle that violates your values, even if everyone around you says, but that's what success looks like. When you reach that point, your net worth might still be growing, but your self-worth is no longer for sale. That's the foundation of true financial freedom, and it has almost nothing to do with hitting some magic number. Now, let me show you something. Banks will never draw for you on a chart the 4 hidden levels of financial independence. They only ever show you one layer: debt. How to use it smartly, how to borrow more, how to leverage your future. But real freedom has 4 stages, and the first one has nothing to do with math. Level 1. Mindset freedom. The first level is purely mental, realizing you are the driver and the economy, Wall Street, and the banking system are just the landscape. Most people live like victims of their paycheck, their taxes, inflation, and their credit score. The script in their head sounds like, I can't do that, my salary won't allow it. I have to keep this job, my mortgage owns me. On top of that, we're fed toxic beliefs like, this house is just a starter home, I need a bigger one soon. If I make more, I have to upgrade my car. Here's a simple exercise. Ask yourself if you weren't trying to impress anyone. No social media, no neighbors, no coworkers. What would you actually need to live comfortably? That answer is the beginning of level 1. Level 2. Freedom from the debt trap. Here's an industry secret. Banks don't exist to manage your money. They exist to monetize your behavior. Interest on your loans, fees on your cards, penalties when you slip up, that's their revenue. So, of course, nobody at the bank is going to say, hey, maybe stop borrowing. The very first step to getting out of debt is brutally simple and brutally ignored. Stop creating new debt. If you're paying only the minimum on your credit cards while still swiping them every week, compound interest is working against you. You're feeding a machine that was designed to keep you on the treadmill. Here's what I tell my clients. Sit down and write out every single debt you have: balance, interest rate, and minimum payment. Then pick a strategy. Usually you start by killing the highest interest rate first. You can't fix what you refuse to look at on paper. Level 3. The emergency fund. Level 3 is boring and absolutely life-changing. An emergency fund. That means 3 to 6 months of your basic living expenses. In cash or something very liquid. Not crypto, not some exotic investment. Money you can actually reach within a day or two. Why don't banks talk about this much? Because an emergency fund means you're less likely to panic borrow, less likely to swipe a card at 25% interest when your car breaks down or you lose your job. When you have that buffer, a layoff, a medical bill, or a broken transmission is an inconvenience, not a life crisis. You buy yourself time to make smart decisions instead of desperate ones. Level 4. Investment and passive income. Freedom. Only after those 3 levels comes what everyone wants to skip to: investing and building passive income. When you finally have a surplus, you have a choice. Do you use it to upgrade your lifestyle or to buy assets that pay you? Instead of just parking it in a savings account or buying another status toy, you can start owning things that generate income. Stocks, bonds, rental properties, small businesses, online products. Whatever matches your risk tolerance and knowledge. The simple idea is this. When your money starts making money, you slowly become less dependent on your paycheck. At some point, your investments cover a portion or all of your living expenses. That's the upper level of financial independence most people never reach, because they're stuck at level 0, permanent debt. These 4 levels are not theory, they are a roadmap. And the moment you see the whole map, you stop letting the bank decide which floor you live on. Let's talk about the real reasons so many people feel stuck. It's not just how much you spend, it's how you make spending decisions. Most of us make money choices in a tiny little window. You see a shirt on sale, a new iPhone on a payment plan, a car with only a few hundred a month in financing, and you think, can I afford this month? What almost no one asks is, if I keep making decisions like this for the next 10 years, what does my life look like? Banks and advertisers love that narrow view. They don't want you thinking about the lifetime cost. They want you focused on the monthly payment. 0 down, low monthly, 0% for the first year. It sounds harmless in isolation, but stack 10 of those little payments, and suddenly your entire paycheck is spoken for before it even hits your account.
Now layer on top of that one of the most powerful forces in finance: compound interest. When it's working for you, through consistent investing, your money quietly grows in the background. But when it's working against you, through credit card balances and high-interest loans, your debt quietly explodes in the background. Miss a payment here, pay the minimum there, and interest gets added to interest. You're not just paying for what you bought, you're paying for time, fear, and delay. And the painful truth is, most people are already using compound interest, just in reverse. They let their debt compound instead of their wealth. So, what are we actually buying with all this? Research on happiness shows something surprising. We spend a huge share of our money on stuff for ourselves: gadgets, clothes, upgrades. And yet, beyond a certain point, it barely moves the needle on how satisfied we are with life. But when people redirect even a small percentage of their money into experiences and other people, the story changes. Trips, dinners with friends, learning a new skill, taking your kids somewhere memorable, helping a family member, giving to a cause you care about. Those are the things that tend to stick in your memory. They create connection, stories, and meaning, not just clutter. So here's a simple reframe you can start using today. When you're about to spend, don't just ask, "Can I fit this into my budget this month?" Ask, "Is this purchase going to matter to me in a year? Does this bring me closer to the life I want, or is it just another payment? Could this money buy me an experience, a bit more freedom, or a chance to help someone instead?" Money by itself has zero emotion. It doesn't automatically bring happiness or misery. It's the direction you send it in, toward debt or toward freedom, toward clutter or toward experiences, toward ego or toward impact, that decides how it feels. The goal isn't to stop spending. The goal is to spend in a way that, when you look back 5 or 10 years from now, you feel proud of the life those dollars helped you build. There's one idea that quietly destroys a lot of financial anxiety, and the system absolutely hates it. It's the idea of enough. Most of us were raised on what I call the old roadmap. More is always better. Bigger house, nicer car, higher income, fancier neighborhood. If you're not upgrading, you're falling behind. That story is perfect for a system built on endless growth. If you always feel like you're not quite there yet, you'll always be willing to work more, borrow more, and spend more just to chase the next level. But there's a new roadmap most people never see. At some point, there is a level of money that is simply enough. Enough to live a life you actually enjoy, not just one that looks good on Instagram. Be yourself without pretending to be richer, busier, or more successful than you are. Cover your needs, enjoy real comforts, and still sleep at night without wondering how you'll pay for it all. Not so little that you're constantly stressed. Not so much that your entire identity becomes protecting, flexing, or managing it. Why would banks hate this idea? Because the moment you say, "You know what, I'm good. I don't need a bigger house or a newer car right now," a few things happen. You borrow less. You swipe less for just because purchases. You stop chasing upgrades just to keep up with someone else's highlight reel. That is terrible for a business model built on your constant dissatisfaction. So here's a simple exercise I give my clients, and you can do it tonight. Grab a piece of paper and answer 2 questions honestly, without thinking about what you're supposed to want. 1. What does my ideal ordinary day look like? Not a vacation, not winning the lottery, just a great Tuesday. What time do you wake up? What kind of work do you do? Who are you around? How much free time do you have? 2. How much money per month would it realistically take to live that day most of the time? Not to impress anyone, not to buy every toy, just to support that version of your life. That number is your temporary enough point. It might change as you grow, but it gives you a target that's rooted in your values, not in the financial industry's marketing. Once you know you're enough, you can start building a plan toward it. And just as important, you can stop letting other people's definition of success quietly spend your money for you. All right, let's land this with a few big truths and some simple steps you can actually act on. First, 3 things I want you to walk away with. Number 1, financial independence starts in your head, not in your bank balance. If you still feel like a victim of your paycheck, your debt, or the economy, no amount of money will ever feel like enough. Number 2, debt and mindless spending are not personal failures. They are features of a system designed to profit from your confusion. Every swipe, every payment you don't really understand, is a tiny income stream for someone else, not for you. Number 3, happiness doesn't come from endlessly chasing more. It comes from knowing what's enough for you and directing your money toward freedom, experiences, and people you care about, instead of just buying the next shiny thing. Now, none of this matters if it just stays as interesting ideas. So here are 3 concrete moves you can make today. 1. Take 30 minutes and do a money autopsy. Write down every source of debt and all your major spending from last month. No judgment, just data. You can't change a pattern you refuse to look at. 2. Pick 1 useless expense to cut this month. Not 10, just 1. Maybe it's a subscription you don't use, random late-night Amazon buys, or eating out on autopilot. Redirect that money toward a goal that actually matters. 3. Start your emergency fund, even if it's tiny. Put something aside, $10, $50, whatever you can, into a separate account. You're not trying to finish the race today, you're just stepping onto the track. If this video opened your eyes and you want me to go deeper, maybe a full breakdown on how to get out of debt step by step, or how to start investing as a complete beginner in the US, drop the word freedom in the comments so I know you're serious. And if you don't want to keep playing the money game on hard mode, hit like, subscribe, and turn on notifications. We're going to keep talking about the truths about money that banks will never tell you, so you can finally start using money as a tool for your life, not the other way around.